proceed. This is a follow-up on our previous video. We advise you to watch the original one before you proceed here. The last time we checked on hemp, things weren't going exactly well for the company. Since then, can you guess? Things haven't been going exactly well for the company. Our previous report came out on the 27th of July. Since then, hemp has experienced a massive slump, but that's not exactly surprising. Practically every company fell during the heart of the summer, with a few exceptions, none of them being on the OTC markets. However, the fact the share price continued sliding when September came speaks that investors are not thrilled with the company's current prospects. If you haven't seen our previous videos, let me brief you. Hemp purchased hemp decortification equipment which would allow the separation of the plant's fiber, thus producing kenaf in the US. This story has been the only thing going on with hemp for months. Even now, every movement is still related to that. Take a look at the most recent jump. For example, September 25th. Since hemp has the equipment, now it needs a facility where production can be initiated. So the company purchased a facility in North Carolina. This initiated a 22% surge, but a very interesting question is at hand. Given hemp's financials, how did it manage to buy it? The company ended the previous quarter with $42,000 in cash, $4.8 million in total current assets, and $2.3 million in sales. Total current liabilities were almost $900,000, while bottom line net income of $1.8 million was recorded. Impressive, you may think. The numbers aren't what they seem. You can check out the other videos to find out why. So basically, almost all the income was in the form of equity from other companies. And although the equity is highly priced, it is very hard to trade, since the companies aren't popular. So hemp is stuck with shares it reports as income, but they're not cold hard cash. And the really big problem still stands. This stock is massively diluted because of the preferred shares. And the really big problem still stands. This stock is massively diluted because of the preferred shares the company's CEO, Mr. Bruce Perlowan, owns. In the past, he has been issued hundreds of millions of preferred K shares, each which could be turned into 10 common ones. Just for last quarter, a total of 400 million common shares were issued. It is essential you remember this when creating expectations for this stock's future. This is Martin Nadenov for HotStock.com.
I have a small amount of money to invest and I want to gamble in the market. I'm looking for a penny stock that'll go up and turn it into $100,000 or $1 million.